next guest, Aman Chowhan, fund manager at Abakkus Asset Manager, is with us. Aman, good to have you on. You come in at a good time because the market finally seems to be getting some sort of a breather, some sort of a relief, and we have green on the screen. But what have you made of the way things are? And Aman, any changes in the portfolio, any new ideas? Because in this period of consolidation, stock prices have been fairly stagnant. While all the news and the noise has been coming through. So just tell us, what's new and what have you been up to last few weeks?
Frankly, last few weeks, nothing much. The sectoral preferences remain the same for us. So while the banking sector has not done well because we expect in the next 2 to 3 months, it might stay stagnant because of the impact of the rate cut, but then the benefits of that will start coming in. So over the next 12 months, the sector still looks good. Preference for NBFCs stays. The larger NBFCs is end up, you can say, in our portfolio. We are getting more incrementally positive on pharma, just waiting for the tariff clarities to come in. Otherwise, that is one sector that is now looking good. Chemicals is one that is on the, you can say, radar to increase our exposure. So that's predominantly what it is. Consumers has been the buzzword, especially once the GST numbers get announced and of late what the government focus has been. But within that, not many names which fit in the valuation criteria. So still not in the portfolio, though it's looking good incrementally because the monsoons are happening also good, but not yet in the portfolio.
So there is no consumption stock, or if you have any consumption stocks, if you could just tell us, Aman. Hi.
Hi. I can't share names, but yeah, we have consumption names, consumer discretionary especially, but it's not a heavy exposure for us. This will be like low single-digit kind of exposure for us.
Okay. What about IT? There is a possibility, there is one view that once the Fed rate cuts start playing out, there is potential for IT re-rating. Anyway, IT has underperformed. Would you be in that camp, or do you think this overall downbeat earnings growth will keep a lid on IT stocks?
I think there's a trading pop that can happen in once the rate cut happens or once the tariff clarity comes in. But beyond that, IT is going to be, especially the large movers, because the growth rate is still going to be single digit, and hence I expect the returns also to be single digit. So not much of a, you can say, excitement for us that way. We would prefer more of platform companies, more of companies which have a differentiated business model, or maybe something in the mid and the small cap space than looking at the larger cap ITs, because the growth rate there, because of the high base, is pretty low.
Hi, Aman. Good to see you. And Aman, let's talk about the sector of the day, which is autos. How are you all approaching this theme? What do you like? The two-wheelers, four-wheelers, CVs, what is on your radar? What about the EVs? You have Ola Electric at 40 rupees. No one is interested. 50%, it's given you in a very, very rapid time frame. Yeah. And now people are talking about higher levels. What do you like? Particularly on the EVs, if you could comment first, and autos on the whole, how are you approaching it?
So EVs definitely is looking interesting, both two-wheelers as well as four-wheelers. So we have small exposure in the four-wheeler EV segment, nothing much on the two-wheeler. The companies that you mentioned are buzzing, especially there is some liquidity there. I think there was a large PE seller in Ola, and that selling is over, and now people are back looking at these names. And overall, today has been a new age company day. Most of the sectors of platform companies or the new age companies are buzzing today. And I think that has helped Ola also and other companies also. From the portfolio perspective, it's looking good, but we are not yet in the portfolio, except for that four-wheeler exposure that we have. But I'm sure we all know about this. These companies are going to gain market share. It's just a matter of timing and the valuation. So what price do you want to pay and how long is your investment horizon? Otherwise, these companies are the future and they should be part of the portfolio.
Four-wheeler player is the one that has exposure to Europe, or the domestic one that has tractor exposure?
Domestic.
The domestic one. Okay, all right. So Mahindra would be the name that we're looking at with regard to the four-wheeler play out here. But what about these new age themes? Mobiwick as well. That one no one was looking at. Today suddenly that one's up 8% move on that name. Paytm has come out of nowhere. Ola Electric. Some of these themes that actually on listing there was not too much excitement for the next few months as well. They bid a lot of time, but now suddenly these stocks are doing well. One thought Paytm did its move at around 900. It's more than 1200 rupees today.
Yeah, so in the near term could be technical factors, as I mentioned. Today's the day all these companies are, but overall I feel there could be a move that people are moving from traditional IT services exposure and getting into these companies, right, where the growth rate is high. Valuations are definitely higher, but at least the growth rate is much more exciting than your traditional IT services company. So that could be one reason. And overall, there is sector rotation every month. Every month there is some flavor, there is some buzz in sector, and looks like these new age companies are in the limelight in the current month. Otherwise, specifically, I don't see any major reason as to why the price moves today specifically.
Okay. Aman, from the whole consumption space, which is where there's so much excitement, of course, we've discussed autos, but otherwise broader consumption, given that, the GST cuts are the next big watch point, is there anything that you would add to the portfolio on a more durable basis than just a bit of a short-term pop? I mean, do you see something structurally, materially changing? And if yes, in which part of consumption?
See, demand definitely is picking up for all the initiatives the government has taken, plus monsoons have been good. So the rural demand is also picking up. So consumer discretionary, say household items, small home appliances, those items, fans, these are segments that is looking good. In the building material space, this has been a laggard for almost 2.5 years now. Well, real estate number of flats sold have been rising every quarter, but the ancillary, the tiles and the pipes and the plywoods and the MDFs and the laminates and all this company, they're being struggling on the demand. So things can move up there. So if people are going to spend, they're also going to spend on renovating the homes, maybe spending more while buying a home. So this segment looks good. It has lagged for more than 2 years now, and it's seeing first signs of bottoming up. We are seeing volume picking up in the last few months, and this can give a good, meaningful 2-3 year investment horizon and a decent return.
What about these electronic manufacturing companies like Keynes, Dixon? Very excited today, Sirma. Up, we're seeing gains between 5-7%. They were massive wealth creators, but in the last 1 month, again, like the rest of the markets, we did see some gains being shaved off. Stock prices didn't do too much. Have they moderated to levels which make the valuations attractive enough to invest for the next 2 to 3 years?
Maybe next 1 year, there might not be a big return in these names, but post that, see if somebody has a 3-year view, then you can still make a 20-30% return from these stocks. Because in the very near term, maybe the demand, because of the AC season is now behind us. Now the next season is going to be next year, which is going to be good, hopefully, but another 2-3 quarters of lag before the number starts to come in. The same way could be for other segments. Hence, 1 year, maybe near term, not much of return from these levels, but with a 2 to 3 year, with good 30-40% return from these names is quite possible.
Okay, all right. Great, Aman. Good to see you in. Thanks a lot for joining and wishing you all the best. And maybe the second half of September, we reconnect. We get a better sense about how demand's going on ground, and we'll have some clarity with regard to GST as well. Well, let's